All right, get set for the only scalping video you will ever need. In this video, we're going to give you all of the tips and techniques required to become a better scalper today. Here's what's coming up in this video, guys. We're going to talk about, we'll define exactly what scalping is when it comes to trading and how you can become a better scalper, making a risk plan to become a better scalper. And also, we're going to talk a little bit about the fees and the cost of trading, because as a scalper, you're going to be doing a lot more trading. So let's jump right into things, guys. The first thing we have to do is define exactly what we're talking about here. What is scalping?
Yeah, like in a trading sense, of course, you'll hear it in the trading world all the time, and it's going to refer to two things. The first is it can be either or. It's either time duration of a trade being short, so in and out very quickly, or it can be taking a very, very small gross profit relative to the amount of movement of stock. And I'll demonstrate here using DD because it happens to be some good scalp trades for today's price action. And I'm going to sort of zoom in on just the second half of the day here. And look, you can see that from about noon, we have a bottom 1150. And then you have a top here like a 60-cent range. You have an 8% range on the entire day. So when you're talking about scalp trading, you're not buying here and then necessarily selling at 12, 13. Scalp trading would be, getting in at this low, out at this high. Would be in at this high, maybe getting out at this low here. Taking trades this is a minute chart, for a couple of minutes, maybe for a few seconds even. And then for pennies at a time, making spread, making 5 cents at a time, making 10 cents at a time. When the range was easily a good 5 to 10 times that, 5 times that in half a day, 10 times that on the full day. So that's a definition of what scalping is. And I know for some people it can be a little bit different. You have traders that trade for a really long period of time and might consider scalp trading, taking 2 or 3% of a day's move. And then others say, no, it's literally taking a penny or two at a time, fraction of a percent, as long as you can profit by it there. But that's the basic definition that we look for when we're scalping. Anything to add there, Sean?
So no, I think that's exactly right. I think the most important thing to understand is, you're going to have the ability, and we are going to go over fees and how that works, because if you're paying, $10 or more per trade, even $5, you may not be able to do what some of these examples that Neil and I will be covering here. We're also going to show some crypto examples and some Forex, because scalping is not just pertaining to equities, right? What it is just like we said, shorter time frame trades and a little bit less profit. You're scalping, so you're getting in and out. You're trying to take advantage of price movements. I have a good example here today on a stock that can also be held for a longer period of time, but that's Carver. And today, again, part of scalping is trading around, so we talked about making a plan, trading around key price levels. So I just waited for this high of the pre-market to break, and then look, even if we could try to zoom in just a little bit here and show you just how quick this trade was. So we're in here at 9:16. Guys, 9:15, I guess, on the break. Within, my trade list is 31 seconds, we take it out. So we're in at 28.50 or so, and then we're out for that $1. Again, we're using key levels. So in 28.50 on a break, out that very next dollar 30 seconds later. That's a scalp trade. And then even this could be considered a scalp trade. We just hold, each one of these is 1 minute. We hold about 10 more minutes to take that out again at 35.53. So you're taking them out at key levels. I just want to show you quickly as well on DD. Some key levels here around the equity side of things. So Neil already talked about this, but look how many times I'm in. First of all, I get excited because why? We're breaking the high there. So again, another key level. This is what scalpers look for. Breaking highs, big size on levels, round numbers, right? So we wait for that to break. We go long, we average in, and then we get out, right? So we quickly get out of this trade. We take another bottom there, then out. So these are quick trades. These are all 1 minute charts. So we've taken 1, 2, 3, 4. We've taken 5 fills in about 7, 8, 9, 10 minutes. Then it rips up to the upside here. That's not a rip, but goes back to the upside, and we get out of many of these trades. So there's multiple trades there. Then look, this is another part of scalping. Anytime you see purple, we switch to shorts. That's another thing that you have to have in your toolbox. You have to be able to borrow if you're trading CFDs or the equity. So we borrow shares and go short. And then look at all of these outs as it explodes to the downside there. And what part of it is too, we are still holding some of this. We're able to go long again off of a VWAP break and go to the upside. And now look where DD goes. To the upside right here. So sure, if you take these trades, you do miss out on some longer term duration, but the idea is that you're limiting the risk here, Brendan, and scalping in and out as much as you can. These are some equity examples, guys. We'll go over some, I guess we could throw to Neil or to Brendan now to talk a little bit about fees, guys.
Yeah, I want to discuss the importance here, guys, that we're understanding we're dealing with very, very short time frames. So that means we're going to have to execute a lot of trades, which in turn is going to cost some money. So we're going to jump into the fees and the cost of trading here and how to control that. But also we have to understand what our risk is here, because if we're dealing with 10 cent, 5 cent, 15 cent wins, does that mean we're actually maybe risking only 2 to 5 cents per trade?
A lot of times it's exactly what it means, and I'm going to break that down here with also some fees that you can quite understand. Like, I'm going to use this example here in DD because it's something that I actually put on here today. Now, look, I talked about this move down from 12, and then it makes a range here, so 12 to 1175, and then back up into this lower high, 1195 to 1190. Then something interesting happens. I'm going to quickly show you guys the level 2. So at that 1190 price, you can see what the bid ask usually is. This is 500 shares, so each is 100 lots. There was a 500,000 share bid on DD at that particular moment. So one way to consider a scalp trade is if it was holding 1190, you can see that range, and this top was only 5 cents, would be simply bid, add liquidity at 91. If you get on the right gateway, you can get paid $2 per 1,000 shares if you have direct market access. So you manage your fees, get long at 91 with my out. If that 90 is going to go, I pay fees to get out and lose 1 cent. So I'm paying fees to get out, earning them to get in. That cost me like a tenth. And then I'm only losing 1 penny. So if you use 10,000 shares there, you're talking about losing like $100 in change. If you get out at 92, 93, 94, an equal amount, you're able to make maybe 2 cents, maybe 2.5 cents an average. If it plays that entire range, then you can make $250 there that way. If it breaks down, I can also go short by removing liquidity at 90. I actually made this trade, by the way. So you go short at 90. I've essentially lost 1 penny, right? And now I'm short at 90, and I pay for that fill. I'm getting out here at 86, 85, 84, 83. You're taking an average out there of about 4 to 4.5 cents on that breakdown. Both of those trades literally take 2 minutes to be done. And from there, my stop was 1 penny there. When I broke that 90 to the downside, my stop can be that 91 that wouldn't break. Again, it's only a 1 cent risk, removing liquidity, and then you're going 3 or 4 to 1. I'm not even holding for the bottom of that 1175, but the key is on that first trade, where I was sitting on the bid in front of 1190. I wanted to get on one of these gateways like a NASDAQ, a JAX, that's going to pay me that $2 per 1,000 in that range so that I can make the rebate. But when I was actually removing liquidity off that big size order at 1190, you were willing to pay up to $3 per 1,000 shares. And on that trade, I was making 4 or 5 pennies instead of trying to make 2 or 3. So you can manage your fees if you have the ability to get in by adding liquidity on at least one side of the trade. Oftentimes, that's what you'll do as a scalp trader. Sometimes you'll get in and out on both ends of the trade by adding liquidity, which is another advantage there. In that particular case, I did remove on 1/2.
So I know there's great talk there on fees, and I know there's a lot here about liquidity and getting in and out, and there's a lot of traders that, of course, will trade with Forex. So I have an example here of the US dollar, Canadian dollar, and if you're trading Forex, it's the exact same thing. I mean, look at some of these tops and bottoms, right? All you really want to do is in, like short, and then out. reload the short and out. This happens a lot in the Forex side of things where, you get these tops and you're able to quickly scalp back and forth until you get major level breaks. So that's the key that Neil was talking about also. Once major levels break, then you can sort of get out. So if you're scalping back and forth here and then all of a sudden, you realize, it's breaking this bottom, then that's when you want to get out. So this is 125.075. So a pretty key level. Once that breaks, you can simply just get out of your trade. You don't need to hold on. That's not scalping. If your levels are broken, you get out ASAP. That's one quick example. I have another one on the crypto side of things. This is actually more my favorite thing to do when I'm looking at crypto right now. And that is, I've marked off here, around the 100. These are 200s. So you go 34.8 to 34.6. And I've just noticed this looking at a Bitcoin chart here. Back and forth, it likes to make these moves in $100 increments. So as you can see here, 34.8 top, and then it comes back down, touches this 34.7, then comes back up, then back down to 34.6, then back up to 34.7, down to 34.6 again. Now, when you don't get that move back to 34.7, you can simply use the last candles as where you're going to say, you know what, maybe this scalp has broken. So then you could get out and then start to talk about short. So short 34.6, look where we stop again. 35, right? 34.5. These bottoms again, that's 34.5, 34.5, 34.5. And then it bounces right back up. These are just minute charts. So, you can go in and I've just zoomed back and forth here, but I've noticed Bitcoin in $100 increments. So again, we're talking about trading a plan. Whether or not it's going to be Forex, you're going to take those little pips, or on a Bitcoin, Ethereum, any sort of crypto, go back test, look at the charts and figure out sort of where those thresholds are. I've just done a little bit of work there on Bitcoin and it's about $100. So you can scalp back and forth. When it breaks and doesn't come back, that's when you get out. So have a plan. It could be done on the equity side, Forex side, or crypto. And why we talk about those last two is fees can be small depending on your exchange. You can get rebates on your crypto trading as well. So look at that as a possible option.
Another great example of a trend type of idea is that chart also as we break down, through some sort of moving average or even VWAP, you're trading above or below VWAP. It gives you opportunity to have a directional bias with these types of trades as well. So they don't have to be home run type of trades. We're talking about very short increment trades where you're looking to capitalize on very quick bursts of movement in whatever instrument that you want to look at. Guys, as we said, doesn't matter if it's equities, cryptocurrencies, Forex, whatever you're trading, the same principles apply here. I hope you like that one, guys, and learn something about scalping. Get down in the comments. Tell us how you scalp. Here's Valeria.
Hey guys, thank you for this informative content. Dear viewers, please subscribe to this channel to see more great videos.